Since 2012, over 5,000 Americans have relocated to Puerto Rico. Probably a few more claimed to have relocated to Puerto Rico to get some tax benefits. Those people might be causing a huge headache for those who are doing this legitimately. Also, there's some information coming out about the IRS and their attempts to gain information on those who are interacting with cryptocurrencies, and basically their resources are sad at this point of what they're revealing. That's what we're talking about in today's video. If you want to know what we're doing in the CT Club, which is our membership group, there's a link for it down below in the video description. Toby and I have happily renounced our US citizenship about 5 years ago, have yet to have a regret about it. And Puerto Rico was one particular option for us, but we decided not to because number one, it's still a territory of the US. Number two, that situation could have easily changed. We might be seeing that right now with this kind of pushback from Puerto Rico. You know, there's obviously complaints about them incentivizing these tax evaders. They are probably instigating some kind of increase in housing costs and further inequality in terms of, you know, the people who are living on that island. So there's been pushback from the locals. We've heard that for years now, and maybe it's going to be enough to oust this tax program. We'll see. They've started a new tax-friendly approach since 2012, and since then 5,000 Americans have relocated to get the benefits of, here's their tax benefits. They grant individuals a 100% exemption on dividends, 60% exemption on municipal taxes and federal, and zero federal taxes on source income earned within the region. So lots of tax benefits. If you declare yourself to be a resident of Puerto Rico, there's a requirement where you have to actually be on that island 183 days a year and declare it as your tax home. Now there's a lot of people who are playing fast and loose with that qualification, trying to claim that they're in Puerto Rico maybe more times than they are. There's a lot of people who have allocated to Puerto Rico, like hedge fund managers, cryptocurrency traders, other wealthy individuals, to get these tax benefits. And these people who are lying about it, or the IRS suspects that they're lying about it, they're going to be audited. I think they're probably going to audit everyone. Not that many people who have relocated to Puerto Rico. 5,000 people, that's not that big of a number. And remember, the IRS did get that $80 billion surplus to double their size to get more money from their citizens. And if they think people are lying about their status in Puerto Rico, yeah, it could not be a good sign for anyone who has not meticulously recorded all of their financial movements if they are in Puerto Rico. So they were granted that $80 billion through the Inflation Reduction Act. I mean, they're going to get your taxes even more and invade your privacy even more. So now let's moving on to the people who are on mainland US. The IRS is kind of showing their cards on their resources for things like sourcing the prices for cryptocurrencies when people claim to be making these trades for the prices that they're claiming. They're using coinmarketcap.com and investing.com. So there's a little plug for those two market cap websites. But additionally, here's what else they're looking for. Mind you, they have, again, got the $80 billion through the Inflation Reduction Act to double their team to get more taxes, and yet they are still asking, the IRS is now asking the general public for help on how they can gather information on how to basically track transactions, identify transactions, also identify transaction patterns, and accumulate bulk transaction information. Basically, those two are the most alarming for me. Why do they need to know your patterns? Is it possibly so that they can predict your future patterns and somehow use that against you for their benefit? Also, collecting bulk data. That just sounds like privacy invading, rights violating type movements, which isn't new for the IRS, especially against the cryptocurrency space. Again, remember in 2017 when they issued the John Doe summons against Coinbase users. Coinbase fought out against that, and then they had to limit it to a scope of what people were trading to qualify to have to fork over their information. So please let me know your thoughts down below in the comments. I would love to hear your thoughts, but here's what I think. There's companies like Chainalysis and many others that are designed to aggregate all of this on-chain data. And we've heard stories back in 2018 when Coinbase was essentially selling contracts to entities like the IRS and to governments around the world of the data on their users. That happened, and through the use of Chainalysis is a company that is literally designed to, again, aggregate this data and sell it. So something tells me the IRS maybe is already using them, but it's interesting that they're fully announcing that they want to collect this bulk data collection. So if you want to know what we're doing with our cryptos and why, how we're protecting our privacy and participating as freely as possible in crypto and doing very well in our altcoins now, believe it or not, you should believe it. If you don't believe it, check out the CT Club. Link is down below in the video description. Thanks for watching. Bye, guys.